Yeah, on the side of the banks, as we are quite fortunate, as I mentioned, many of the traditional banks are now already adopted cryptocurrencies into their core banking systems.
If you saw Brian Moynihan, the CEO of Bank of America, he was at Davos recently. In an interview, they asked him about crypto, and he said, the minute we're allowed to be in crypto, we will be there. We will be there in payments. That's their number one focus. So he's ready to go. Same with BNY Mellon. BNY Mellon, I saw the head of their ETF business recently. I asked him what they were doing on custody, and he said, the minute we're allowed to do custody without getting in trouble with a bank regulator, we're already ready. We have it all programmed, we're ready to go. So.
So let's transition. Let me do a quick intro. Thank you guys for tapping in. Almost 800 people on the call. Welcome. In today's video breakdown, I'm going to dive into some perspectives from some industry leading experts to kind of solidify that now is not the time to be fearful. Now is the time to be tapped into communities and research, directing and orienting your attention on the long-term perspective of this space. We are in the midst of a massive transformation, and these institutions tell you on stage that we are witnessing the birth of a new asset class. They tell you in their documents that if they do not adopt and adapt to these new technologies and incorporate them in their investment scheme, they will fall behind. And a lot of people will never come across this information because they're focused on the wrong people. They're following the wrong influencers on the internet. They're telling you guys when to buy at the improper times. And now is the time to implement proper information and education into what it is that you're doing in the space so that you can be a long-term survivor. Because it is my firm belief that, 560 million active crypto participants that are operating in the space right now, a very large handful of them are not going to survive 5 years from now because they're not doing the right things. They're not soaking up the right information. And a lot of people are going to get shaken out. All right. So I'm here in an attempt to show you guys information that the mainstream is never going to bring to your attention. I'm going to first share with you guys individuals who we're going to be listening to today, so that way you can kind of get a gist of who it is that you're going to be hearing from: market makers, asset managers, large industry leading experts from some of the world's biggest institutions. And I'm going to show you guys a slew of video clips. We're going to be reading thoroughly through some documents, proving everything that I'm attempting to show you guys, that this is the info that you want to be tapped into, but gets hardly any views, never gets any mainstream attention, and is what the researchers have pretty much been covering and telling you guys for the longest time, that this stuff is going to take time, which is something that a lot of people don't want to hear. Unfortunate, but it's the truth. And that at some point in time, we will see trillions of dollars come into the space, but it's important to know when money is flowing out and into safe haven assets, and when money is flowing out of safe haven assets and into risk assets. It is important to understand those cycles, even if they're short term, even if they're months long. It's important to know that stuff. Some people will listen, some people won't. I get it. This info is not for everybody, but the people that want to tap in and want to learn and want to really actually educate themselves in the markets in which they involve themselves in, you will tap in and you will benefit. So where to start? I guess I want to start here. I want to read thoroughly through a document to kind of give you guys a perspective of this idea that these banks, these institutions, they know, they've all sat on closed door meetings together, and they know that if one bank adopts, which they are, digital assets into their investment scheme, the ones that don't will fall behind. So I want to first get you guys to listen to this individual, Zoe Cruz. She's a industry leading expert from a large financial group. She talks about allocating from an institutional perspective into this digital asset ecosystem, and mentions 0% allocation is not a good idea. And then I want to get into a document where they talk pretty much about the same exact thing, that banks and institutions that do not adopt digital assets and crypto over the next couple of years will fall behind. So this is going to set the tone for today's video breakdown. Take a second and just listen to what this lady on stage says.
Non-correlated returns in a portfolio. And from your perspective, what is the appropriate level of allocation that institutional investors should consider when they're looking at bringing digital assets into a portfolio?
So what I'd like to say is that zero allocation to the space is the wrong answer. More than 2 to 10%, 10% if you can't stand it, if you're not all in on the space, is also the wrong answer. This is a nascent asset class. It is risky, but what has us all excited about the space is the asymmetry of risk reward.
A very quick video clip. I just wanted to play that for you guys, right? 0% allocation to this space is the wrong answer. That is massive coming from an industry leading expert at a large financial group. Okay. This video breakdown only has 828 views. Okay. This is just to prove my point that nobody's paying attention to this information. And now here is a document to back more of this as well. So let me just present this screen. I got to go over here. Okay, so this is a document, again, shared in the private CYPRX research group in the Discord. Anybody that wants access to any of this information, we have literally a whole log of detailed video breakdowns, panel discussions, thousands of documented videos from these large organizations, all of which I'm going to share with you guys today that are recent. You guys have access to this info. You know, if you want to tap into real institutional information and research, head over to CYPRXtrading.com, tap into our private Discord. We love to have you on the team. This is labeled the future of global banking. And this report just goes on to back what this lady says. If we scroll right down here, I'm just going to read like 4 different highlights from this. Let's zoom in so you all can see it. This executive summary goes on to talk about how the banking sector stands at the precipice of a paradigm shift driven by decentralized autonomous blockchain networks. Here it goes on to talk about strategic imperatives for banks, infrastructure modernization. Banks must replace legacy core banking systems with blockchain-compatible architectures. McKinsey estimates institutions resisting this shift risk 5.2% ROE declines by 2025. That is this year, right? So take into consideration that right now, the total crypto fear and greed index sitting at a 17%. We got institutional investors from Invesco leaning over to Bitwise on stage saying that they wish they could buy the dip, but right now we're in a risk-off environment, right?
Matt and I were talking earlier about how, ETH was down almost 30% over the weekend, thanks to Mr. Trump's tariffs. And we were just saying to each other, God, I wish I could hit the buy button. But like we're companies where you have to get things pretty clear.
So again, what I'm trying to get you guys to see is this is the stuff that the mainstream's not going to convey to you all. The mainstream's going to pump fear, uncertainty, and doubt. They're going to be like, oh my God, if you go look on CNN right now, probably all they're covering is that Bitcoin dropped below $80,000. From a retail standpoint, that's going to induce fear. That's going to induce uncertainty, right? The conclusion to this is it talks about the inevitable transformation. It says the shift to decentralized banking isn't a speculative trend, but an economic inevitability driven by $1.7 trillion in annual inefficiencies across traditional finance. Institutions adopting the action plan above, this is a whole entire action plan that they delivered on how institutions should adopt digital assets into their core banking infrastructure.
So Matthias, from your perspective, how is it looking like for the traditional financial systems to be able to build this new infrastructure and integrate it well with the traditional setups?
On the side of the banks, as we are quite fortunate, as I mentioned, many of the traditional banks are now already adopted cryptocurrencies into their core banking systems.
Institutions adopting this action plan above position themselves to capture 34% of the $2.1 trillion tokenized asset market by 2030. Conversely, banks maintaining the status quo operations risk obsolescence as tech giants and DeFi protocols capture 19% of the global payments revenue by 2027. The strategic window for decisive action is closing rapidly. Blockchain integration must transition from pilot projects to product systems within 24 to 36 months to secure competitive advantages, right? So not only do we have some time horizons here, right, by 2027, which is only 2 years away. Again, a lot of people don't like to hear this because mainstream retail investors, they don't have a 5-year plan. Most people can't even fathom their lives 5 years from now, right? You should have a 5-year plan if you're an investor and an allocator into this digital asset ecosystem. If you don't plan on holding digital assets until 2030 and beyond, when all this stuff really kicks off, why are you even a market participant, right? I honestly don't understand that perspective. So many people get tired of hearing, we're early, but don't understand, zooming out, how early we really truly are, sitting at $3 trillion market cap, right? I like that they mentioned the XRPL in this for broader payment cross-border efficiencies. I just thought I'd throw that in there. Right down here in the conclusion, securing the future of the banking infrastructure, it talks about how financial institutions must act decisively within the next 24 to 36 months to implement and optimize these consensus mechanisms. Those who delay risk falling behind in transaction process capabilities, security measures, and regulatory compliance, right? And so again, the reason why I'm sharing this with you guys, just to coexist with the video breakdown that I just shared with you all as well, we have this lady, she's from a large financial firm, and she's sitting on stage with a BlackRock representative. She's sitting on stage with a Coinbase representative. She's sitting on stage with a Galaxy representative. Okay, let me see if I can find here it is. Oh no, let's see if I can go back just a little bit so you guys can see all the names on the backboard. Here it is. So we got Steve Kurtz from Galaxy. We got Robbie Mitchnick, who was an ex-Ripple representative from BlackRock. We got Zoe Cruz, the lady talking, and then we got an individual rep from Blockchain Association as well, and a rep from Coinbase. And she sat on stage and said, having 0% allocation to the space is no bueno. You know, it's not a good idea. Okay. So I just wanted to show you guys, not only are they talking about this on stage, but they're also talking about this in their documents, right? You don't want to find yourself being left behind because you're fearful right now. When these financial institutions aren't fearful, they are just risk averse, meaning that when there is a risk off market environment, they're not going to allocate into one of the riskiest, if not the riskiest asset class on the face of this planet, right? And that is what's happening right now. So to continue down the rabbit hole, all right, since we mentioned that there's an institutional investor sitting on stage and it's the BlackRock saying that they should have capital allocated to this space, pay attention. That's going to full circle towards the end of today's video breakdown. Let's get into another quick video. I want you guys, because we're going to listen to some of these perspectives here from some of these industry leading experts. Listen to who these people are. Okay, so that way you can kind of just get a gist on why you should be paying attention. This video is only from a month ago, so it's from this year, and it only has 86 views. Pay attention.
And if I were in the audience, I would be really curious what these wonderful people have to say. Most of them are my friends for a long time. And these are not the people that got into crypto yesterday because of the hype, but the real OGs of the space that predict the future of finance and shape it with everything that they do. And we have a really great mix today. We have Aliyah from a very crypto-native Signum Bank. We have Alan, the GSR and market-making guys, the people who control the liquidity and the money flows. Lior from the VC, also the money part, which looks for the outliers in the space and funds the next unicorn. Maybe that would be one of your projects in the future. And Dominic, a little bit more traditional player, nevertheless, still very technologically advanced from Bitcoin Swiss.
Okay, so when we are delivering insights to our private community and what we pay attention to, these are the type of people who we're paying attention to. She mentioned that you have an individual representative on stage from Signum Bank. You have a market maker from GSR. You all have an individual on stage from Bitcoin Swiss, right? These are all major market participants that have millions invested into this space, if not billions. Okay, so again, pay attention to what it is that these people are saying, because they're telling you guys right, like literally on stage. And I feel like they know that people aren't paying attention to this info. They have to know, because this is crazy, some of the stuff that they say in these panel discussions that are all relatively recent. Heading over here, we're going to come back to those people here in just 1 second, again, to full circle. But here's another industry leading expert. Her name is Jennifer Murphy, excuse me. She is, I believe, the CEO of this organization, Runa Digital Asset, if I'm pronouncing that correctly. This video breakdown only has 74 views, was updated just a couple of days ago on February 20th. Listen to what she says here on stage.
If you saw Brian Moynihan, the CEO of Bank of America, he was at Davos recently. In an interview, they asked him about crypto, and he said, the minute we're allowed to be in crypto, we will be there. We will be there in payments. That's their number one focus. So he's ready to go. Same with BNY Mellon. BNY Mellon, I saw the head of their ETF business recently. I asked him what they were doing on custody, and he said, The minute we're allowed to do custody without getting in trouble with a bank regulator, we're already ready. We have it all programmed, we're ready to go.
I hope you guys are listening to what she just said. She just talked about how both BNY Mellon and Bank of America have mentioned in most recent times that as soon as everything is ready to go, regulations are clear, they are entering into the space. That is a massive statement coming from an institutional investor, right? A CEO of an organization that deals directly with institutions sitting on stage in a video upload just from February 20th. I mean, this is massive, okay? And you see the rest of the market right now extremely fearful, but these people aren't sitting on stage fearful at all whatsoever. They're optimistic more so than they've ever been. And if we come over here just to show you guys who Runa is, Runa Digital Asset is an institutional investment firm specializing in digital assets. The company focuses on providing investors with exposure to the emerging digital asset ecosystem. If we come over here to their profile, I like to pay attention to key vocabulary. And coming and scrolling right down here on their website, we can see it talks about understanding volatility. And it mentions here that we are experiencing the birth of an asset class. I want you guys to really listen to that. We are experiencing the birth of an asset class. Who in your family bloodline has ever done this? Who in your family bloodline was ever able to experience the birth of a new asset class and actually invest in it early enough to benefit from it in terms of price appreciation over a long period of time? Most likely nobody, unless your family members got lucky enough to buy internet stock at the beginning of the early days of the internet. Most likely nobody listening in on this call. And if you did, then kudos to you and bravo to your family, but most likely nobody here. I know my family definitely didn't get to capitalize on that opportunity. So I'm not going to fumble the ball here. So we are experiencing the birth of a new asset class. We have an industry leading expert on stage from this organization, the CEO, saying that banks are coming when the regulatory clarity is clear enough. Now, keep in mind key vocabulary here. If we come over here to this panel discussion, listen to what this dude says and how he gives price projections on Bitcoin and Ethereum. I personally only hold Bitcoin. I don't really hold any Ethereum. I don't only hold Bitcoin, excuse me, that came out wrong. I hold some Bitcoin. I don't hold Ethereum. So I'm optimistic about this price projection here that he delivers. Keep in mind, okay, because again, I'm going to full circle all this. We have the individual representative on stage sitting next to BlackRock, Robbie Mitchnick, Zoe Cruz, saying that institutions need to have money allocated to the space or risk being left behind. I showed you guys the document. This is all going to full circle. So back to this key vocabulary, we are experiencing the birth of a new asset class. I try to tell you guys that they use the same vocabulary across the board because these are the people that are sitting in on the same closed door meetings at the same roundtables. They all know what's up. Listen to what this gentleman here says.
My Coinbase account was, I think, 2012. I don't think it's unreasonable that Bitcoin goes to $1 million at some point. ETH goes to 100K. You just don't really witness the burst of an asset class very often.
We don't really witness the birth of an asset class very often. A lot of people in the retail space that come into crypto that are manipulated into thinking crypto is some get rich quick hype scheme don't even really understand what we are currently living through. In 20 years, 30, 40, 50 years from now, people will look back, our children and our children's children will look back at this moment in time and be like, holy crap, your grandfather or your grandmother got to live through that? That is crazy. Imagine not having crypto in your portfolio later on down the road, because right now in the moment, you got manipulated by this bullcrap, right? 17 out of 100 in the crypto fear and greed index because you don't understand the macro, you don't understand what's going on or why crypto's pulling back and you thought crypto was a scam. When in reality, every single institutional investor that I've just shown you so far is extremely optimistic and bullish in crypto, right? Think about that. Think about that. It's so crazy that the mainstream will never share with you this information, and it has to be for a reason, okay? To continue, check this out. So we now understand that institutions, if they don't allocate into the space, risk falling behind. We've seen perspectives from industry-leading experts sitting on stage talking about how banks are coming. Check this out. So this is a document shared within our private group from the OMF-IF, A New Age of Digital Wealth, Tokenization and the Transformation of Investments. And if we come over here, it talks about how investors' attitudes towards digital assets are undergoing a fundamental shift, where once skepticism or cautiousness trumped curiosity, asset managers and owners are increasingly investigating how they can incorporate digital assets into their investment cases. And if we come over here, it says it's still early days in terms of actual investments. Roughly half of these institutional participants surveyed have less than 1% of their portfolios in digital assets. And by 2028 coexists with the other document that I shared with you guys talking about by 2027, these institutions need to onboard. But by 2028, a similar proportion of these individuals surveyed expect to have 1 to 10% of their investments allocated to digital assets. Okay, keep in mind 1 to 10%. Pay attention to those numbers. Then down here at the bottom, it says 94% of institutional investors believe in the long-term value of blockchain tech and crypto and digital assets, right? Do you all remember the little tiny panel discussion of these individuals that I shared with you on stage and who they are and why you should pay attention to them? Okay, let's go back to what they say here. Keep in mind, 1 to 10% allocated into this space. Let's listen to what these individuals have to say about what that would do in terms of the market value of the digital asset ecosystem. Just listen and keep in mind who they're talking about, because they mentioned BlackRock. And to full circle, like I said I would, you remember the lady on stage, Zoe, sitting next to Robbie Mitchnick from BlackRock, literally telling him, hey, having 0 to 10% allocated to the space is a no bueno. You should have money allocated to this space, right? This is so crazy what I'm showing you guys. So check it out. Listen to what they say here.
Yes, for sure. So in December, we also launched an Outlook piece with a couple of predictions. And based on our risk models and long-term exponential growth models, we had a conservative floor target of 10 trillion. So I guess like 7.5 is rather on the even on the more conservative side. And basically, again, there are like two catalysts for it. A, we are currently matching again this cyclicality of Bitcoin, of the US election cycle, of the liquidity cycle. So there's this notion of there is some onset of an easing cycle when it comes to monetary policy in the US. And then obviously institutions, as you outlined, they're still like around 60% of the big players still not able to allocate into these ETF vehicles based on compliance restrictions or firm-wide policies, for instance. And this should resolve in the upcoming months, and then I guess like we will see like an acceleration in institutional flows.
I'll pause it right there before this other gentleman speaks. He talks about how their projection for the total cryptocurrency market cap over Trump's next 4-year term is $10 trillion, right? He also mentioned how 60% of institutions are still sitting sidelined because of regulatory implications. You heard the gentleman here, that video that I played for you guys, Invesco, right? You guys remember sitting next to Bitwise saying they wish they could buy the dip. They wish they could buy the dip, but they can't because there's a bunch of regulatory requirements and we're in a risk-off market environment, right? This is, oh my goodness gracious, people, come on now. This is the stuff that matters. This is the stuff that you should be tapping into so that way you understand what's happening long-term. Everybody thought 2025 was going to be the year, and I'm not saying it's not. There's going to be some massive things that happen in 2025, but you need to be thinking so much more long-term. And if you don't, again, you risk falling behind due to market manipulation of your brains, of your mindsets, and not understanding where this market is really headed in 2, 3, 4, 5 years from now. That is the people that understand that long-term perspective are the people that are going to really, truly benefit when these institutions do actually onboard. All right. So let's continue down the rabbit hole. Now that we listened to that gentleman there, let's listen to what this gentleman says about BlackRock allocating. If they were to allocate 10% into this digital asset ecosystem, what would happen to the market cap? Take a second and listen.
Yeah, so I think there's two aspects of this that I think is important for me to clarify. And I like the point on BlackRock and Larry Fink talking about 2% allocation and what that means. I mean, of course, if people start allocating 10% and all institutional managers and all large-scale funds are doing that, I think we're talking hundreds of trillions of dollars at that point, right? So I think we need to remember we're talking hundreds of trillions of dollars at that point, right? So I think we need to remember the proportions of what seemingly little numbers in traditional capital markets can actually do to influence the market cap in our industry. And I think the point I would reference here was it seems like a big number until it's not. And 7.5 trillion, I mean, even just in November and December, there was Blockworks and the Block putting out articles. I mean, 1 trillion was added in those 2 months. It was a 30-day period where 1 trillion was added alone. I mean, right, and before the election, market cap was at 2. Right. So I think, again, thinking about what are the catalysts that really fundamentally change and drive this, it doesn't need much to really fundamentally change the way in which value is brought into this industry. I think the bigger topic that we have, and the reason why it's hard to make these predictions, is fundamentally, I believe over time, this industry will continue to grow and basically outperform most other asset classes in terms of growth rates.
I'll pause it right there. You have an institutional investor sitting on stage with other market makers and other large banks. He just said that this asset class will outperform every other asset class over the coming years. He talked about how if BlackRock were to just allocate 10% into this space, it's talking hundreds of trillions of dollars here, people. Okay, considering everything else that I just showed you up to this point. Now, let me continue to share with you that they being these market participants, say the same exact thing on stage. This is Consensus Hong Kong. I believe, if I'm not mistaken, this is the current CEO of Binance. Listen to what he just said at CoinDesk Consensus Hong Kong live just the other day about institutions on the verge of allocating anywhere between 2 to 10% into this space. Take a second and listen.
To the global leaders, as well as the financial institutions globally, unlike previous edition, when US being the largest economy in the world, being the largest asset allocator in the world, it's extremely negative towards crypto. I think everybody else is waiting on the sideline. But since then, at Davos, I think the global leaders are starting to embrace it, to say, hey, we need to have a crypto agenda as well, right? When I speak to the sovereign wealth funds, as Mr. Larry Finn from BlackRock put it so elegantly, the question by them, by the sovereign wealth fund, is, should I start allocating into crypto? The question is, should I do a 2% allocation or 5% allocation, right? So you're starting to have fresh optimism coming through. And the financial institutions are now...
So he literally just confirmed how at Davos this year, financial institutions are starting to discuss and talk about, should they allocate 2% or 5% into crypto, okay? What I'm showing you guys, again, is all information that is never going to reach the mainstream. And it's the type of stuff on a day-to-day basis that you should be tapping into. You shouldn't be tapping into price projections and Fibonacci extensions and astronomical alignments and blah, 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 and all this bull crap that is out there amongst retail investors. You should be tapping in and listening to the people that actually move these markets: market makers, financial institutions, hedge funds, asset managers, family offices. Their perspectives are the ones that matter, because they're the ones that are going to drive these markets higher. And when they are sitting sidelined, when they are not allocating to this space because of a risk-off market environment, you can also tap into that stuff and understand, as a retail participant, that is when you should be, I don't know, just as an example, sitting in stable coins that are earning yield to gather up more capital to buy up the freaking discounted prices. But again, people don't think of those strategies, because really the only strategy that is presented to mainstream retail investors is buy, 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 buy. There are no defensive strategies. There are no mixed of defense and offensive strategies amongst retail participants on the internet. It's all just buy based off of Fibonacci extensions and price projections, right? That is the wrong answer. Now is the time for education. Now is the time for proper knowledge. Like, you have to be able to accumulate knowledge and then properly apply it. If you're just accumulating knowledge and then not being able to properly apply it, that knowledge becomes worthless, all right? I cannot stress enough, again, ladies and gentlemen, tap in, tap in, tap in. All of these video breakdowns are curated and finely detailed playlists in our private CYPRX Discord. Thousands of videos like this updated on a consistent basis. We have global researchers worldwide tapping into this information, sharing it with our private community to keep people tapped in, to keep people motivated and fixated on the things that matter. If you guys want access to that, head over to CYPRXtrading.com. We'd love to have you on the team. That's all I have to share with you guys today. I hope you all enjoyed, again, industry-leading experts' perspectives on this space that are never going to reach the mainstream. Tap in with us. Again, if you guys enjoyed, smash that thumbs up button. If you're watching this on YouTube, make sure that you're subscribed. I do appreciate the love and the support. I thought that I'd come on here, given the fact that right now the market is in extreme fearful mode. Do not be fearful. Understand the conditions that are currently weighing on prices. Understand that this is most likely temporary. How long this temporary downtrend is going to last, none of us have a magic crystal ball, but if we understand the underlying macro factors that are weighing on price action, as soon as we see those things shift, as soon as we see that sentiment shift, we will be able to determine that the bottom is most likely in, right? Right now, it's shaky. There's too much market. I'm not going to get into that. I'm not going to beat a dead horse and start on that rant again. All right. But anyways, blessings to you guys. As always, be cognizant. Please be aware as to what information you're consuming out there and digesting. You are what you consume, right? Man, as always, I'll see you guys in the next video breakdown.